Houston, we have liftoff. So the gold price took off like a rocket in commemoration of the 50th anniversary of Apollo 11 Launch and Lunar landings. One small step for precious metals, one giant leap for gold bugs, as the gold price barely paused at a series of resistance levels. That's $1,300, $1,350, $1,370 and $1,400. None managed to hold gold in check for more than a couple of days or so, as the price gravitated towards a rendezvous with $1,450, which the gold price hit a week ago before retreating to currently stand at $1,419. My analysis just prior to the gold price taking off, first made available to patrons who support my work, concluded in bullish expectations for the summer trend to see the gold price target a series of resistance levels all the way towards $1,400. And I am sure there are many gold bugs out there who will be crowing loudly about the breakout in the gold price, loudly banging out gold bug mantra, as they will likely have been doing so since the gold price was trading as high as $1,900. However, for a rational analyst, the gold price trading at $1,280 towards the end of May, it was just not possible to conclude that this time the gold price would break above a 5-year-old trading range of resistance at $1,370. The best one can do is to state that the gold price is targeting an assault on $1,370 that would set the scene for gold's next bullish phase, with targets of $1,400 and $1,500 and $1,800 and beyond. And in attempts to explain the jump in the gold price, it looks like that most have jumped on board the imminent cut in US interest rates bandwagon, with likely the first cut next week. Is that really the reason for the jump in the gold price? An expected 25 basis point cut in US interest rates? Gold is a limited supply commodity, an alternative for money, a hard currency so to speak, because unlike fiat currencies it cannot be printed, and a reminder that the world's central banks for the past 100 years have been busy printing money like there's no tomorrow, resulting in all currencies being in a perpetual state of free fall against one another, where exchange rate movements are just variations in the rates of free fall. So remember that all currencies are in a perpetual state of free fall, and all you see in exchange rates is variations or volatility in the rates of free fall. And that is the primary long-term driver for the gold price, a perpetual fiat currency money printing, aka the inflation megatrend, which is why my message for the past decade has been to leverage oneself to the inflation megatrend by investing in assets that cannot be easily printed, such as housing and yes, certain stocks, i.e. Google. So should we be surprised by the gold price breakout? No. It was inevitable. Sooner or later, and the same for silver, sooner or later we are going to see the silver price take off on an even more parabolic trend trajectory than gold. And the rest of this analysis has first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And also remember to subscribe to this YouTube channel for the next video in this and other trend forecast series.